What is the volume profile? Volume profile mastery 402. The volume profile is a visual preparation of the connection between price levels and volume. It contains so-called profile peaks, which provide us information about the price ranges where a lot of volume was traded in relation to the predetermined analysis period. So you define a period and you create a volume profile out of this, or based on the information in that period. And there you can see profile peaks and refer to them in the future as mountains, or in the following. The volume profile changes if you change the window or the time horizon you want to analyze. So if you increase the time horizon, of course, the zones of important value change, or the valleys and the mountains change. But the bigger the time frame, the more important those informations or mountains and valleys are. Resistances and support lines can be read and drawn into the chart based on the volume profile, and the illustration provides information about where the fair price is, because we already told that several times. There's the value area, there is the first standard deviation of the volume that is traded in the period you analyze. Most of the times you will take a daily or a weekly profile, and based on that you can see more easily where is the fair price, where do market participants agree and act on a price and trade a lot. So let us go through an example or a example. If you have price, and this is the previous week's value or profile, so this is the previous days or weeks value area, it doesn't matter, it can be any time period, and price is opening somewhere. We think, or we plan, that price is outside, and as soon as the price starts to accept the value area, which you can see here, which is the value area low, we plan that the price will move to the POC. So let us extend the POC. This is the previous day. So we have a new session, we have a new day. This is the POC. And we have a value area high and the value area low. So when the price enters the value area of a previous session, we plan that we have a reaction at the POC. Maybe we spent there some time, maybe we have a hard reaction. Then we will go down to the value area, and then we will start to trade through the whole value area. Same thing happens from the opposite side. So if price is outside and steps into a previous value area, or does not need to be a value area, can just be a high volume area or cluster, and spends time in that value area, we will plan with a reaction at the POC or VPOC, so because it's the volume point of control, and then trading back to the side of the value area they entered, and then trading through the whole high volume cluster. Those are the basics about this, but let us quickly revive the things we already told you. In a profile like this, we have a POC, point of control, but we define this as the VPOC because we have a POC also in the market profile, and in market profile we call it POC, in this we call it VPOC. Very often it happens that we also name the VPOC POC because it's more short, although it's just one letter, but officially this one is the VPOC. We have a value area high, which is the first standard deviation of the profile you're looking at. To the upside, a value area low is the same to the downside, and we have a low volume node, which is referred to this low volume area. Can be any low volume area. There can be also several low volume areas. We refer them, or the official name is low volume area, but we name them as valleys because we have mountains and valleys. I think this makes sense, a lot of sense. We also have an absolute high and an absolute low, which is the absolute high and absolute low of the range we are viewing or analyzing, what the profile is about. So absolute high of the day or of the week, or can, as I said, can be any time frame. Usually you just have a chart like this, can be a line or Japanese candlestick chart, it doesn't matter, but it's way more difficult if you have a chart like this to see where the most volume is traded, where most market participants agreed on a price or a price level or several price levels or an area. Yes, you can read all the information out of that, but it is way easier if you use a volume profile or a market profile or a combination of both. This could be an example chart or a line chart matching to this volume profile. Important to know is that when the price is outside of a value area, it always, or most of the times, in a price point like this, we left the fair value area. Price is seeking to look for another fair area. So it changes or switches more to price discovery. Either we have a fundamental shift or the perceived value, the future perceived value of market participants is different now. So prices move, but at some point they want to have a fair price again. So most market participants agree on that and trade on that price level. When we are in price discovery and we go back into a value area, we plan, and the highest likelihood is that we will trade through that whole value area or high volume cluster. And most of the times there will be a reaction at the POC. So this could be another naked volume profile. We have the absolute low, we have the absolute high, we have the value area high, we have the value area low, and we have a POC. Profiles can look very different. We have a low volume area or valley here. We have one mountain here, we have another mountain here, and here we kind of have a low volume area, but we don't view this as a low volume area because it is at the extreme of the session we are looking at. We want values or low volume areas in between mountains or high volume areas. Let us go through a quick example. When you have multiple profiles, it doesn't matter if days, weeks, months, years, or even just 5 minutes, and those are secondly candles, it doesn't matter. You have value areas, and at some price points you will have an overlay of multiple important or interesting price levels. So for example, from this profile we have a low volume node here. Some people call this also imbalance, we call it low volume node or valley. We have a value area high of the following day and another value area high of the third following day. So we have multiple important levels on here. So in the future, this can be a very interesting level for us. So we can just draw a line in our chart, or we can extend the untouched or naked value area highs or POCs to the right. In most charting software this is possible, and we very often do this. But then there was a fundamental shift, whatever, there was a gap, and price went from this balance phase. As you can see, we have a big sideways range. We went into price discovery, and at some point market, as always, tries to find another fair value, so created another value area, and the market started to range, because a market does not trend forever and is not forever in price discovery. Then tried to continue with price discovery, but this price discovery failed, and we stepped back into the previous day's value area, got some reaction at the POC, went to the value area low, and then accepted the value area before we tried another price discovery and then traded through the previous day's value area. Then we started at the following day. This is a very interesting, kind of an interesting example. We had some acceptance at the high of the value area, so we spent a lot of time there and also created volume at the high of the previous day's value area. And then at some point we went again into price discovery mode and touched exactly the important level from the past, so the low volume node and the two value areas highs. There was price discovery, so if we would have entered the trade, we should take profits here, or we should look at the charts and look for short areas here, because we have falling value areas. So market participants are agreeing on a lower price. Either there is more supply or less demand. but value areas are falling. Most likely we are in a downtrend, so we can look for short opportunities over here and check if we can continue downwards. Furthermore, we established a new value area on the low, and now we are in price discovery. We are doing a retest, and we could look for a short opportunity here. But what setups we are looking for, we will dive deeper into that in the following slides. But first, we will talk about some opening intraday strategies or variants or options of intraday trading strategies.